This chart shows how fast money can lose its value. And I'm going to reveal a series of unsettling resemblances throughout this video, including this one here. Do you see any resemblance? If the same pattern continues to play out, I'll tell you where the price of gold could be headed. Remember, none of this is financial advice, but I'm just sharing with you what I'm seeing. Now let's dig into 30 seconds of history for everyone who is seeing this shocking chart for the first time. Between 1918 and 1923, the German paper mark collapsed. The price of one gold mark rose from near parity to more than 1 trillion paper marks. The cause of that collapse was the increase in money supply. Germany's money supply expanded from 29 billion marks in 1919 to 497 quintillion marks by 1923. That's the same as printing money, or what's now called quantitative easing. Now look at the gold price in US dollars from 1980 through 2025. Decades of quiet growth and long plateaus, each consolidation setting the stage for the next acceleration. Now let's see the overlay again. The Weimar Germany hyperinflation of one gold mark priced in paper marks compared to the modern gold price of 1 troy ounce priced in US dollars. Different currencies, different time scales, yet the exponential shape is nearly identical. Human reactions to greed and fear have been the same since the beginning of time. How many times have you heard that one? Why would it be any different now? Now let's get into some of the particulars that you're really wanting to know. Is the breakout real? When will it happen? And how high will gold go? I have an analysis that will answer all of those questions for you in the next few minutes of this video. Here's the confirmation, the technical trigger. Gold has now broken above the long-term resistance line, connecting the peaks of 1980 and 2011. The breakout price was $3,000, but the move was so strong that it shot up to around $3,500 and consolidated there. Not for 1 or 2 or 3 or even 4 months, but 5 months of consolidation without even retesting that resistance line, and then continued shooting up to $4,400 before experiencing a small pullback. That looks like a confirmed breakout to me. Okay, now that we've settled the breakout being real, you're asking yourself, alright, when is all of this going to happen? In Weimar Germany, the setup phase unfolded over 5 years and went vertical in the 6th year. Globally, the same setup structure has been forming for over 40 years, so the scale of the current crisis is much longer, because governments have learned how to kick the can down the road over and over again, but may mean the scale of this is going to be much, much larger. That's my take on this, but Hemingway put it best when he was asked, "How did you go bankrupt?" 2 ways, he said, gradually, then suddenly. The gradual phase was the 40 years before the breakout. Now that the breakout has happened, the suddenly phase may be next. Let's go back to the overlay again and use that as a map to see what may be coming next. Based on what I see, there doesn't seem to be any significant pullback during this next phase, which means that we're entering the parabolic phase right now. This recent 10% dip from $4,400 down to about $4,000 may be the last pullback down to this level that we'll ever see. This isn't meant to scare you, but maybe give you the confidence you need to purchase gold even at these levels and trust that any pullbacks will be small and short-lived. It will take courage to climb the wall of worry, as the Wall Street bros like to call it, when a stock is rising, because you need to hold on for dear life as the price climbs without selling it too early. For over 40 years, that line capped gold's rise. Gold's recent breakout signals that the next phase has already begun. So in short, when is this going to happen? It's happening right now. We're unlucky to be living in this time period where wars and political strife are commonplace, but you are lucky to be watching this video right now at the very base of this parabolic move. Okay, now, the answer that everyone is looking for, how high can this go? Let me show you a cool parallel that I noticed while making these charts. Take a look at this chart showing potentially how gold can move in the coming years. Feels possible, right? Given that this happened before. Listen to this. It takes about 100 gold marks to equal the weight of 1 troy ounce of gold. Now, see, the price of a gold mark was roughly 10,000 paper marks at this first consolidation, as you can see in this chart. If we go to the chart of the modern price of gold at the same consolidation level, it leads to $1 million per troy ounce, which is exactly 100 times more than the gold mark was worth in paper marks. 100 times the weight and 100 times the price? Is that pure coincidence? I'll let you be the judge of that. As crazy as all of this sounds, it's unsettling how things are developing in parallel with the Weimar hyperinflation, right? It makes sense that as more dollars are created out of thin air, that everything rises in price. And once confidence is lost in the world reserve currency and wars break out, that the US will need to print more dollars, just as Germany did back then as well. On October 28th, just 9 days ago from taking this screen recording of the US debt, it has already risen $126 billion since then. That's right, $126 billion in just 9 days. Remember, it took over 200 years for the first $1 trillion of US debt. That's why it feels like we're on the brink of a similar pattern repeating all over again. If you haven't seen my previous video showing why US bond yields are also signaling the same thing, then please watch that one. There should be a video link on your screen coming up. My next video is going to introduce silver and make a case for why silver is an even better investment, but why history disagrees. And I'll post a link of that one as well right here when it's ready. For more data-driven breakdowns of gold, money supply, and inflation cycles, please subscribe and follow the channel. I hope you got something out of this.